31 minutes past the hour. Welcome back, everybody. I'm Jeff Cutmore. Tobacco stocks in focus following reports Imperial Tobacco is preparing to raise its bid for rival Altadis. According to the Observer newspaper, Imperial will raise its offer from 47 euros per share to 52 euros a share. That values the Franco-Spanish tobacco maker at nearly 14 billion euros. The improved bid hopes to trump a 50 euro per share offer on the table from private equity group CVC Capital Partners. But the CVC bid for Altadis was in disarray at the end of last week after PAI, a private equity firm working with it, dropped out. What happens next? Peter Leonardis is Director of European Research at Churchill Capital. Peter, welcome back.
Thanks, Jeff.
We're still talking about this tobacco deal.
We are, but just for 2.5 months now. So in terms of Spanish timing and past deals, not overly long yet.
How close are we to the end game then?
You know, I think we're very close. You have both parties, that being the CVC consortium, which even though PAI dropped out, they're still trying to gather other French and Spanish investors. They're trying to tap 5 to 7 investment banks to provide some bridge equity as well. So I still think that they're a viable bidder here at the 50 euro a share level. But I think the key thing is Imperial Tobacco. They're at 47. They can go higher. They can go to 52, like the Observer says. It's interesting what the Altadis board says, because 2.5 months ago, at the beginning of this, the Altadis board said that at 50 euros a share, this was a done deal. We're at 50. No binding offers, but we're at 50 indicative offers. Now, Spanish press is reporting that they want 54. So I think it's going to be very interesting to see how many games they play with the final numbers here. 52 would be fair. 54 would be generous. You know, 50 is a nice offer, but not overly fair, especially when you compare it to past deals in the industry, like the Japan Tobacco, when they took over Gallagher recently here in the UK.
What does that represent in terms of a multiple to the earnings of the business?
It represents, basically, we're going to look at EBITDA. And remember now that it's going to be about 13 times compared to the industry of about 11 times. And when you look at Altadis, though, it's a very unique business. They have 3 separate divisions. They have logistics, they have cigars, they have cigarettes as well. They also have a publicly traded logistics company, and they have a business that, while performing well, could be managed better. They've recently raised their growth estimates, raised their margin estimates. So for not only a private equity player, but for a business player as well, there's a lot of opportunity to come in here and manage the business a lot better than it's currently being managed.
Yeah, I mean, it's a good private equity target, lots of cash flow. Not a particularly attractive business for many people. Some of our investors would actually flinch at us buying a tobacco company.
That's the key thing here, that you haven't seen private equity in the tobacco space. But when you look at it, like you said, there is a lot of good cash flow, a lot of low capex numbers, and the different divisions as well. Now, the one tricky thing that comes into private equity is no American private equity bidder can play here, because Altadis' cigar business is a 50-50 joint venture with the Cuban government. So right then, we've gone ahead and we've eliminated all the usual suspects, the American players. So that's why we're only focused on CVC of the UK and PII of Paris, which is now out. So it's
but oddly, of course, both those companies are very substantially funded by US investors.
That's exactly right. There's nothing holds, though, a U.S. investor, though, from doing an investment in a European fund that then goes ahead and invests in a prohibited activity for an American investor, though.
Anna, come on in.
Peter, good morning to you.
Good morning.
Everybody knows the growth story behind these stocks at the moment, the fact that they're coming under fire in their home markets or in the Western, more developed markets, and they're seeking out opportunities in the less developed markets. What happens longer term, though? How long do you think before we realistically see some of these emerging markets start to, or have they already, clamp down on the health side effects and all of those other things that we've already seen happening here in Europe?
That's a great question, Anna, because a lot of Altadis' growth is going to come from Eastern Europe, it's going to come from Southeast Asia, it's going to come from the whole Asian markets as a whole. So that's a great question. As we all know, July 1st in the UK, they're going to be banning smoking, and that's just a matter of time, I think, before we get to a lot of these emerging markets and the same thing happens there. I think that's why we're seeing, though, this M&A activity. I mean, Imperial Tobacco recently reached in the U.S. It bought Commonwealth brands. It recently, is going to the Spanish markets to get for Altadis as well. So I think it's just a matter of time, and I think the greater the scale, the Altrias, the British American tobaccos, and hopefully a new and improved Imperial Tobacco will allow it to compete on scale a lot better.
Louisa.
Yeah, Peter, good morning. How many more consolidation moves do you think that we have left in the market before it becomes, before you can say that is complete? I mean, many are talking about this as being kind of the last of the big ones that could take place. What do you see?
I would agree with that. I think this is the last of the big one, and I think that's why the white elephant in the room here is British American Tobacco. British American Tobacco is on the record as saying two conflicting things. A, they'd like to overtake Altria, which they can only do by acquiring Altadis, and B, that they think that current M&A prices are way too high, which would rule them out then acquiring either Imperial Tobacco or Altadis. So I do think we're nearing the end of a major M&A play here in the tobacco industry, and I think the elephant in the room is you still have that nuclear option, that 5% chance that British American Tobacco realizes that the door is closing, that they need to make a move now.
John.
It's a very interesting market to watch it coming to its end. But you've got giants with huge cash flows playing with each other against private equity with huge cash flows and paying very high prices for companies with very limited growth prospects.
Yeah, I would think very limited growth prospects, but still a chance of, you know, on the Altadis side, a sum of the parts opportunity or more margin expansion. And I think that's the key here is, you're right, that growth is going to diminish, so we need to focus on margin expansion and minimizing CapEx.
Peter, great to see you.
Thanks Jeff.
Very much.
Thank you very much.
We'll catch up soon.
I'm sure we will.
Peter Lenardis, Director of European Research at Churchill Capital.